Hey guys, Joe Frank here, market analyst for YouTrading. And in today's video, we're going to be taking a quick look at a couple of trade ideas that I'm monitoring at the moment. The first one I want to look at is with regards to oil, because it's been an interesting week of China developments. We started off the week concerned about zero COVID lockdowns, about civil unrest in China, but now it seems as though the tone from policymakers there seems to be shifting a little bit. They're talking about prioritizing vaccination for the elderly, which has been a weakness in China for ages, low vaccination rate amongst the elderly. And, you know, when you've got a low vaccination rate amongst the elderly, who are the most vulnerable to coronavirus, that kind of means that they had to continue with those zero COVID measures just to prevent mass death, basically. But now they're talking about how they're going to accelerate the vaccinations of the elderly. And pretty much the feeling is that perhaps this civil unrest is going to sort of force the Chinese government's hand into easing these zero COVID measures a little bit. So we're seeing a little bit of optimism in oil markets, which are $2 higher in WTI, that is, or about 2.5% higher. Seems to have broken out of this this downtrend that we had been in for the last couple of weeks, or at least since the middle of November. This break means that I think we could probably move back above 80 and potentially into the mid 80s. We could test this resistance here. That's the mid-October low around 82. Could probe the 21 and 50-day moving averages, which are just below 85. Do I expect that we're going to push all the way to the top of that October, November range? No, probably not. Whatever happens with China, things are still looking very, very difficult because if they do pivot away from their zero COVID strategy, well, then what we're going to have is a rapid, massive spread of coronavirus, really for the first time that we've ever seen in China, which we're not sure how that's going to affect the economic outlook there, but it's not going to be good, probably. So it's too early to declare victory on the China demand front. In terms of oil. And in terms of the rest of the global outlook, things are still looking pretty shaky as the effects of all the monetary tightening that we've already had this year come in. So I'm thinking if we do get above this 82 area and push towards the mid 80s, that might be a nice area to potentially add to some shorts. We'll have to be playing things by ear. I still think that there's every possibility that in the coming months we're going to test these lows that I was talking about before, in the low 60s for WTI. Although we'll have to see what OPEC does to try and stem that decline. In terms of another trade idea that I'm looking at the moment, guys, it's to do with the US dollar, which appears to have, let me just change this moving average to the 200-day moving average. Found some support here at its 200-day moving average, at its recent low, seems to have formed a bit of a double bottom and looks to me as though it could be in for a test of this resistance area around the mid-107s and also the 21-day moving average in the coming days. Now, that to me looks like a potential area where we could add some short positions and then target a retest of these lows and an eventual break below the 200-day moving average. The reason I'm saying that is because I think Fed hawkishness has now peaked. US inflation has peaked. But there's a couple of risk events that we've got coming up which could potentially send us higher than this level. Various Fed speakers out this week. The Fed speakers that we have had so far have been sort of hawkish leaning, talking about how markets might be underestimating the scope for Fed tightening next year. But it all rests on Powell, really, and we've got Powell speaking, Powell being the Fed chairman. He's speaking on Wednesday. And then we've also got a lot of important US jobs data out this week. JOLTS coming up, the official labour market report on Friday, and the manufacturing ISM report as well. All of these data points will influence, and the Fed speak will influence expectations for the Fed. So if there is any pushback against this sort of Fed slowing their pace of rate hikes narrative, which I personally don't think there will be, but if there is, then we could see a bit of a break higher in the Dixie. but I'll be monitoring those things with the potential view, if we get back to this nice area, of adding to some short positions in the dollar. But anyway, guys, hope you enjoyed the video. Hope you all found it informative, and I will see you all in the next one.